All right, let's get started here. Let me just close this out. Get this out of the way. Trend following trades disclaimer. Trend following trades and all content is for educational purposes only. Past performance is not necessarily indicative of future performance. It is your responsibility to confirm and decide which trades to take. Trade only with risk capital, that is, trade with money that, if lost, will not adversely impact your lifestyle and your ability to meet your financial obligations. TrendFollowingTrades.com is not responsible for any losses incurred as a result of using any of our trading strategies, software, descriptive entries, and/or exits. Once again, Trend Following Trades is for educational purposes only and will follow all CFTC and NFA guidelines. This service is no way, shape, or form is or ever will be designed to be a signal service. All partners and employees are not CTAs or NFA certified, nor do I want to be, at least. Let me just get that out of the way. I want to bring you into our website here. First of all, I'd like to say, hello, everybody. Ladies and gentlemen, thank you for taking the time out of your busy schedule to be here with us today. I'm going to cover a few topics, some for existing and past users to talk about the trade room, and also those that came in here new. We're going to go over the system, the methodology with some examples, talk about some pricing, some special pricing near the end of the webinar, and for anybody that wants to hang around after that, we can go over some specific charts if you want to see examples, things of that nature. This webinar is being recorded, and a link to it will be sent out to all people that were invited, and that pretty much covers that for now. Please don't hesitate to ask any questions that you'd like. I answer them as soon as I can, one by one, and spend as much time as necessary to get them all answered. Like I said, this webinar has no expiration, and so if you want to hang around towards the end, we can pull up charts and do things of that nature. If for some reason we don't answer your questions to your complete satisfaction, please don't hesitate to go to our website, which is right here. It's www.trendfollowingtrades.com, and on this contact tab, you can find our email address and phone number. So this number is active. It does have voicemail. We'll be monitoring it between the hours of 9 and 4. And if you call Eastern Time, if you call before or after that, or for some reason we can't get on, you'll get a voicemail asking you to leave your number, and we can either call you back, or if you're out of the country, please leave all the pertinent information that you know of for us to dial outside of the United States. And I do want to talk about the first order of business for existing users is the trade room. Okay, due to some very unfortunate situations in my family, I will no longer be moderating our daily trade room for the near future. My family is very important to me, and I don't feel I can give the proper time and, more importantly, focus required to moderate the trade room at this point in time. Instead, I'll be working on adding various types of information to the members area of the website and working with members more closely at their request. I will also be doing weekly training sessions to all current members, so you will be hearing from me. You'll be invited to sessions. We'll be discussing various different things. I'll be sending out emails occasionally. We're not a big company that blasts you with emails all the time, as you probably well know in the past. You won't get emails from us every day. You can follow us on Twitter and Facebook and YouTube if you want to really see. Maybe every other day or day I'll post some charts and things like that showing certain trades on certain markets. I'll also be expanding on trading material that's already written in the members area to include a variety of trading styles and trading plans using all the tools provided by Trend Following Trades. This will include target traders, trailing traders, scalpers, and believe it or not, counter trend traders. Because I've had to talk to a lot of traders over the past couple of weeks, and there are people that are using our tools to counter trend trade, and that's something I'd like to talk about also. We kind of use those areas to exit, but a lot of people do use those areas to enter trades. And as a company, something new, we're going to try to develop the market analyzer, a very powerful tool in NinjaTrader, to better recognize upcoming trade setups so that you, the traders, won't have to scan a bunch of charts and find trades. This is something completely new, and development of it's just started. The goal is to have the market analyzer show you which markets are setting up the right way based upon the recommendations of how the tools should be used, so that you can click on any chart in the market analyzer and it'll pop up and give you ample time to get in the trade. I'll also be spending some time with a few specific members of the trade room that I was working with to improve their trading performance. These people know who they are and will be hearing from me in the next few days. Also, I will make myself available to members who request my help in both showing them how TFT tools are used and evaluating their current trading with the goal of helping them to become either profitable or more profitable traders. As trend traders looking to capture as much out of every move as possible, I will be adding videos that, number one, show ways to avoid congestion if you don't want to trade it, ways to identify the highest probability setups inside congestion that lead to its breakout before it happens, show how standard TFT tools and methodology provide the ability for traders to quickly and effectively look at markets and be able to take high probability trades with a 2-to-1 or minimum 2-to-1 reward to risk ratio confidently and consistently. And also, I want to talk about the power of trailing and using simple math to determine the number of contracts traded, where to take the first position off, and how only a 50% win-loss ratio can generate profits. You hear a lot out there about people talking about 70, 80, 90% trade success and things of that nature. What I've discovered over the years and what people are still talking about today is really talking about small targets, 1-to-1 risk to reward or less. So it really only takes 1 or 2 losses to wipe out a lot of gains. When you're trading a method or system that gives you twice the profit out of every trade that you get for loss, you can really have a 50% win to loss ratio and still make decent money net. And that's an important thing that we like to talk about. However, I will also be adding taking off profit in areas of support and resistance that are close to 2-to-1 and sometimes greater than 2-to-1. I do want to start bringing up some of the tools, so for those of you that haven't been here, they can start to see it. And I do want to quote Leonardo da Vinci. Everybody talks about Fibonacci and, Elliott wave, and, Leonardo da Vinci, I guess, did a lot of work with Fibonacci, but, it's a famous quote, and he says, simplicity is the ultimate in sophistication. And here at Trend Following Trades, we are all about simplicity. Trading is hard enough to succeed at, and our goal is to make it as easy as possible using visual simplicity as a core of this objective. After all, trading is a visual exercise. Everything you look and see is done by your eyes. So any way that we can make it simpler for you to see, to me, is better in the long run. The indicators and tools I'm about to show you are incredibly simple, yet contain an amazing amount of sophistication that is blind to the eye, which is good. So having said that, I'm just going to pull up a couple of charts here. I got a bunch here later on, but these are all from today. I'm going to pull up a 4-wicked oil and a 5-wicked Renko oil. And I want to talk about the tools. Okay, every tool you see up here is provided by Trend Following Trades. We include, this happens to be a wicked Renko chart. This is 5-wicked Renko. And let me just get this off of the crosshairs here. This is a 4-wicked Renko chart. All the signals you see here are what we call auto signals. These are actual trades that have qualified with all the various rules, and arrows fire. These arrows are customizable in both type and color, and also distance away from the price action. We have something down here called a momentum or MOMO tool. This is not a standard squeeze indicator by any means. It may have the same look only because it's plotted as a histogram. There's quite a few indicators combined in here, and it's an indicator that's very hard to get to diverge. So as trend traders, we want to follow the trend as long as we can, and when this indicator diverges, we really do not want to trade into that. It also shows a lot of reverse divergence or hidden divergence, which is also something very important. We then have these lines here called a chop zone, and as you can see right now, if you look over here in oil on the right-hand side in the 5 Renko, you see the MOMO indicator inside this chop zone. This is not an area we want to trade. And any setups that do show up in here come up in yellow, and that means that they're firing inside the chop zone. Okay, so they can be ignored. You can see the one that fired outside that met the criteria, and you can also see the result. Each brick here, by the way, is 5 ticks. So just hang on 1 second here. And I also want to explain, I'm going to bring up some drawing tools here. I'm going to have to disconnect from my feed, because it's going to move otherwise. So I'm disconnected. I do want to talk about what we call the trigger line, the stop area, and this value area. I'm going to use this example. It just occurred on oil. And I do want to talk about the power of this. What I'm going to do here is I'm going to draw essentially a line here and a line here. This is where I'd like you folks to concentrate on. Okay? And I'd also like you to concentrate on this. Okay? Basically what we have, we call this area in between the trigger line and the stop area the value zone. And at any given point in time, and that's really the critical statement, any given point in time, price has a value. When it pulls up inside this area, we consider this to be, for a short, selling in this area, we consider price to be at a discount. The higher up you go into this area, the more discount the price is. The lower you come out of this area, the more expensive you're paying, essentially, to go short. So this is a very important concept inside here. And if you look at these tools as we go on, essentially the object is to really get short inside this value area for a short. And we do have a few different methodologies that will enter here before the trigger or enter here after the actual trigger where the arrow fires. We want to see momentum come from the zero line out past the chop zone. You'll get a pullback in price, and then in this value area is where we want to decide to go short. Me particularly, I like to place my stop a few ticks above here, and then look at 2 to 1 distances. With Renko bars, it's real easy to calculate where you got in, where your stop is, and you can go for 2 to 1 target, knowing that right down here is an area of support. If my 2 to 1 right near there gets me what I want, I will take off of here, or I'll manage to break even and see if it'll break out for an extended target. When trading multiple contracts, we'll definitely take some size off here and then trail out to either divergence, break of this trigger line, or close above this stop area here to capture as much of this swing as we can. So I just really wanted to kind of explain that. Let me just draw this in here. This is really important, this area right in here we call the value zone. So I'm really trying to show, and let me just erase this now. I want to take all this off, and that's what you see. Okay? Whenever you see momentum, the first thing we look at, head down into sell, out of the chop zone. We look at price down here, and we see it come back up into the value area. We have alerts, 2 different kinds, ones that we use for wick charts and ones that we use for brick charts. However, you can apply the brick chart alerts into here, and you can have them alert when you get bars closing inside this value area. And these alerts are specifically set up to when the bar closes that came inside the value area by a certain percentage, which you can control completely, and then closes out, a place to go short. A lot of people will put stop limit orders there to go short right here. Some people will let it trigger, wait for a retrace, try to get a better fill. Doing that, sometimes you risk the price just running on you, and it's basically taking a trade to close this bar is believing that momentum has continued and has gone on. So the other thing I want to talk about is very simplistic indicators, not cluttered charts, very visually easy to see. I mean, I can go back through here, nice trade here this morning, not into any kind of divergence. Did go to a full 2 to 1. I mean, if you put 10 ticks of risk on this, 20 tick target, did get there. You get in here. You can also take off here so you don't have to break this double top. Keeps your stop smaller. You have about a 7 tick stop, 14 tick target. It actually hit This double top here was at 16 ticks. So that is the 2-to-1 or more. So I just want to really show that, the visual simplicity of the system. Let me just take a look at some questions here and just see if anybody, any option for day trading is my day job. Yeah, Toby, that's, I just needed to throw some questions up there to get an idea of some of the group. Is this an average true range stop? This stop line, what you see here, without really giving away all of what it's going on, incorporates quite a bit. The whole concept of getting short in this value area does take into account Fibonacci, does take into account Elliott wave, believe it or not. Maybe not the specific percentages, but depending on how fast the market pulls down and retraces, all those two items I just mentioned have a lot of discretion involved with them. This is an area to visually, simplistically see what we consider a value area at this moment in time and to take advantage of it to get short. We do look at areas of support and resistance. Left side, I'm a big component of that, both prior days highs and lows, multi-days highs and lows, and what you're trading into. So a lot of times I'll draw in lines here to see what I'm trading into, how far I have to go. You'll see it hit here, retrace, and then eventually break, things of that nature. But that's all drawn in manually by the trader, and a lot of times, a lot of our traders that are very successful at using these tools don't do it at all. They put their trade on, they put their target, they put their stop, and they manage a trade according to the tools. So the whole concept behind this is to get rid of decision lock. Another thing here I want to show you, I'm going to put these crosshairs on here. I'm going to put them on global just for now so that you can see is what we call alignment. You want to increase in probability, look for alignment. Here's your two charts, the 5-wick Renko on the right, the 4-wick Renko on the left. And as you can see, the alignment between two time frames is very clear. If you feel you want to get in this swing right down here as it pulls down, we do have a retrace into the value area on the 4-wick chart on the left. We have a double top reject essentially. We can get short up in here. On the right, there is no value area there. I'll tell you what, let me take this off of here so I can, now that I've got this lined up. I'm talking about this area right here. We have a double top reject to get back short. Just draw this line in. Essentially, we can get short. Good place to get short is right here. Before the signal actually forms, knowing it's going to form if it pulls outside this value area, or you can wait. I myself like to put a stop just above here. People that will trade the true system will put a stop just above these stop dots here, or a close above them actually. If you get short long enough in the value area, you can do that. It will dramatically increase your win rate. I like to keep my stops small, let my winners run. So here's an area of resistance. I'll basically put my stop, I'll put my stop just right above this area here. So I get short here, my stop's above here, initial, moves along, looking at managing a trade at this double bottom. I'm in here. I'm in here, hit this double bottom, can either take profit, it is really 2-to-1, although it's small. When I say small, it's 14 ticks, or with a 7-tick risk, or I can decide I just want to move the break even and let this pull further for 3-to-1 or more. Or if I get in later, after the close of the signal, to get a true 2-to-1, you're going to have to let this break, and you'll get that down here. Then we employ a trailing concept on the smaller time frame chart, where a close above these dots will get us out. Notice in here, it stays in all the way down to here, so you can trail all the way out, get some nice profit on a trailer. Do believe in 3-lot trading, trading in lots of 3, taking 2/3 of your position off of the target and trailing a third. 2 lots, taking 1 off of the target and then moving the break even and trailing 1. A lot of times the math won't work on that in non-trending markets. At a 50% win-to-loss ratio, either 1 contract trading on off, or 3 with taking 2 off at a target and trailing the third, at a 50% win ratio will make you money. So it's just basic math. And, you know, we can talk about trading methodologies and all that, but math is very important. Got a question here. Ernie's asking, we trade from the 4 to 5 Renko. The answer is both. If you want alignment, there's a couple different ways to do it, and we describe it, looking for alignment. The main time frame chart, I like to look on the crude oil, happens to be the 5-wick Renko. You can trade on this chart by itself. When we get clear alignment, which is right in here, we don't have divergence on a smaller time frame. We don't have divergence here on a larger time frame. We get a pullback, we get short. Okay, it's kind of a trader's choice, which one you want to trade. But when you see this, really it doesn't matter which trade you take, which chart you take the trade off of. Okay, price is still there, but you see what we call alignment, which shows that everything is in alignment to continue to go down further, and we do believe in continuation before reversal. And this, I just shut this off. This just happened, got shut off at 12 o'clock or 12:30, something like that. I believe I am disconnected, yes. So, yeah, actually here we shut this off at, you can see here, right at the beginning of the webinar, 1 o'clock. I just don't want this moving because of the drawing tools that I might use from GoToWebinar. So, and again, here on a smaller time frame, we call this railroad tracking into the value area. When you see this, it almost always out of the chop zone, pull back. And this is, by the way, what I want to show, the anatomy of a perfect trade. Excuse me, a perfect trade and a perfect trade setup. You're going to go down through here. We go from buy to sell. It doesn't get much better looking than this. And if you're patient and wait for these setups, that's the key. One of my biggest problems is I'm not very patient. I like to trade, and I'll be addressing that in the members area for people like me. But we have a divergence at the top here. Let's call that a start point. You want to call that wave number 1, the beginning of wave number 1. Call it what you want, but nobody ever knows if this is going to continue to go back up. But it is a great point for us to call this a condition of divergence. Market does, in this case, happen to come back down. It breaks through the chop zone, goes from buy to sell out of the chop zone, which is an indicator for us, hey, you know, we want to really take a look at what's going on here. Comes back in, railroad tracks into this area, and right here we have a short signal. Okay, me personally, I want to enter this trade right here. More often than not, we see this, and the minute it enters the value area, the first close out will fire this signal. So if it's going to fire the signal here, why not get in 4 ticks earlier in this case? Okay, when you're dealing with this type of setup, you really have to open up your stop a little bit until the bar closes. This being 4-wick. On the 5-wick Renko, it actually happened here. So there isn't complete alignment. However, people do use the 4-wick as a main time frame chart also. So you can use both. You can use one, and then with enough back testing and actual look, which we do encourage, and also with the training, you'll see that, again, these arrows that you see in red, we would not take this one because one had already fired. We're in a trailing mode. If you want to take this in green here, you really didn't achieve much profit. However, you notice that we're in a diverged state. Good time to manage, get out, break even, or with a little bit of profit. So there's a lot going on here, all yellow. Okay, you get one little green, what we call a turn trade. Essentially, the swing is down here. You can see the market sideways to down. So I don't know that I'd be taking any long trades on this side anyway. Lower low here, lower high. We do look for that. We do look for market structure to help us and guide us in the direction of the trades that we do take. Momentum helps us with that. And also there's some pretty neat free swing indicators you can get out there on places like Big Mike's Forum and things like that that show higher lows and lower highs and things like that. Can't code them into here. They're not ours. So, you know, it's stuff you can get out there. People use these tools also in conjunction with other tools, but you really don't need to. So let me just take a break here and see if anybody else has any questions. An example using hybrid Renkos. We'll get to that, Brad. The The Renko bar choices, just to give you a choice here, that we supply our, Ninja has a standard Renko. We got a Rick Renko, Better Renko, okay, which essentially fills in the brick area. All right, it's the same as a wicked Renko, but it does fill in the wicked area. I particularly like to see the wicks, but some people like these. And then also, you can use whatever Renko bars you may have. And then here's another type of Renko. It's a Better Renko that you can start. It will reset itself at the start of a session. So, I really don't get into this, but wicked Renko and standard Renko are a lot of the Renko bars that we use. So they're the ones that we supply outside of NinjaTrader, and anything that you have on it, other than that, as long as you can chart it, will work. I also want to bring something else up. You're looking at wicked Renko here, and we're looking at crude oil. For those of you that like range bars, okay, I want to bring this up. You're going to see this you're not going to see a lot of this in our website at this point in time, but I do want to show you, for people that like range bars, all this was developed around Renko. However, as you'll see today, range bars work just fine too. Here's a 6 range, here's an 8 range. You can go higher, you can go lower. Each instrument has its sweet spot and time frame based on historical volatility and range. So you don't want to trade a 2 range bar, inside of oil. It's just so fast and really just a lot of noise. The Renko bars clear up a lot of this noise, but as you can see here, the signals do, same methodology out of the chop zone. By the way, these are all fully programmable, these chop zones. We actually have settings. Let me just go into an area of the member site. I'm going to drag this over. We do have in the members area a page that various different markets here, and we have a main time frame, what we call a main time frame, as well as a secondary time frame. The size of the bars that we like to use. Okay, you can see here TF, this is a little bit large, this is a little bit large, and this will change at times where volatility increases and decreases. We get down into here, you can see gold too, a little bit on the high side, oil a little bit on the high side. However, people do like to trade these, and again, the key is if you want to use 2 charts, not to get too small, not to get too large. Then you start to get into swing trading and things of that nature. A lot of the currencies. And then also what we provide here is recommended chop zone settings, these lines here. They are programmable within the indicators. You don't need to draw them in any longer. You double-click on this momentum indicator, and it'll ask you where you want the chop zone. It'll ask you if you want the arrows to be plotted inside the chop zone, and if yes, we give them a yellow color along with the signal. So you have full customization of the signals and what you want to do with them. And again, these chop zone settings are provided so that each market is a little bit different in its point value and this chop value. So you kind of need to take a look at this as a good guideline. So I just wanted to kind of bring you that and show you that. And this is showing you range bars, and you can see here on oil. Today again, I'm trying to work with the latest stuff going on here. You'll see, you had a nice buy to sell, pullback short. By the way, these arrows are the most successful trades. We call them flip trades. They have the deepest retraces into the value area, and when they do close, we put a stop right above that. Here, in this case, it's 8 ticks, target 16 ticks, got hit. So 2-to-1, risk to reward. We would not take these because we go into either a physical trailing mode by actual trailing contracts or a mental trailing mode. Unless there's some real good left side resistance that it's rejecting off of, really don't want to take it. Down here, calling it late in the zone. But again, this is a smaller time frame. You go up into the larger time frames here. You'll see here, you have your trade here. Comes back, if it gets you out of break even, we are not in divergence. Get a nice double top reject here, get right back in, and poof, breaks right down through. And what I'll call, this is something that you'll see a lot more of in training, I'll call this a wedge into a triple break. Essentially, You go into here, you have a double bottom. Nothing's to the tick anymore, especially in oil, but you get a retrace back in here and break. One thing I do want to talk about, high-frequency trading and volume. You won't see any volume indicators in here. This is price action trading. Standard volume indicators, as far as I'm concerned, have gone by the wayside, standard volume indicators, because nowadays people are spraying volume, high-frequency trading. We used to be able to follow the footprints of bigger traders, but nowadays people don't throw 100 lots in when they want to take a position on. They throw 1 lots in at millisecond increments. They can get it all in a second, and nobody knows that it has been done by one trader, at least at the time that it's happening. So standard volume is kind of a thing of the past, monitoring it, and also with the high frequency trading. Really, the one thing that hasn't changed, and I've gone back many years that data was available. One thing that hasn't changed is price action. Price action, that's what this indicator is up here, still has as much value as it did before high-frequency trading and before all the other games that are played by computers. So, these computers, a lot of this is actually programmed into a lot of high-frequency trading computers to recognize these type of value, and they do go for small type of scalps. But as a retail trader, you can do that kind of trading if you want to be real active, or you can hang in there for a longer target and keep knowing that these type of setups often break out and make your trading a little bit more worthwhile for the commission that you pay for it. So I also do want to show you, just as an example to show you what, here I'm just going to pull up a couple of tick bars for those that trade tick charts and are used to seeing that. I do have them up here. Here's a 240, and here is a 175. Okay, now you can see tick charts. I mean, you see the the movement, but when you have a lot of chop, the volume really, tick charts show that. So that's a good thing about it. And when things start to trend nicely, you get your transition like I was talking about. Let me get back to a pointer here. From buy to sell, you retrace into the value area, try to get short inside here. Okay, again, double bottom, triple break type look, wedge pattern into a flat bottom triangle, breaks out, goes for a nice 2-to-1 target, or if not, more. Got a retrace, violates the price action area on this tick time frame. This is kind of small for crude oil. Does work also, keeps your stops tight, your targets small. So depending on what you're really after, you can see a lot of these areas here, these signals. And we try to stay away from the yellow. We try to go with the green. Yellow showing stuff inside the chop zone, so you can just see here. Not every trade's going to be a winner. We only need to win 50% of the time when going for 2-to-1. If you're scalping, it's a little different story. But if you want to scalp, you can scalp using these tools. What's great about it is these tools work on any time frame, any instrument. You do want to find the sweet spots of certain instruments. They work for, you're not limited to, oh, this one's for oil and this one's for the ES and this one's for gold, and you have to buy certain packages. You get the whole kick, gang, bang, caboodle, and you can play and do with it as you please. So I kind of went over all that. Let me get back up something that looks a little bit cleaner, especially after you've worked with it for a while. These charts definitely. Let's just pull up a Russell chart here of today. Okay, notice here, this is the Russell 2000 today. I cut it off at 1 o'clock, just got into a sell signal. But look at all this chop. See inside the chop zone here? We want to just ignore these signals. Okay, I did have a nice trade early this morning. I had one right after the open right here. Again, you'll notice here, by the way, the 4-wick is what I used as a main time frame. This is a trade, a wedge trade into a flat top triangle with momentum on your side. This is one of the few times that we ignore divergence, because I know with experience and trading that this trade setup has a high probability of breaking out. So get in right here, put our stop a few ticks below here. That gives us about 6 ticks of risk. Each brick here is 4 ticks, so we know this will break. We only need to get 12 ticks to get to a 2-to-1. If you want to get higher than that, in this particular case, it did follow through. At this reversal bar here, we are diverged again. Be a good place to exit some trailers. Trading pre-market, and let me just get to some alignment here and show you. Here's this trade right here with alignment with the 3. This pullback is the 3-wick Renko. Pullback here. You don't want to take a trade into here. Here's the double top. Here's the pullback. Essentially double bottom reject into a triple break with the direction of momentum, with the direction of the swing. So that kind of gets through that. And if anybody has any specific examples of what they'd like to see, I'd love to pull it up. But let me just get through. All right, we just got somebody and arrived here. There haven't been too many questions here, Chris. Let me just make you an organizer here. So we get to see in here. Chris just came in here, is the gentleman that actually developed these tools initially and started trend following trades. And the only thing, Chris, let me just mute you here because I do believe you have your mic on. Okay, if you want to unmute yourself, just let me know. So essentially, this is another great setup into here. And later on, I do want to get through this webinar for those of you that hang around the existing members that know all this and have seen all this. And those of you that have not, let me know, shoot me an email, give me a call. I'll work with you on trying to filter all this stuff. If you haven't had a lot of success, if you have, please share it with us. We love to hear all successful stories. And yeah, Lou, I'll pull up the ES and let me just do that real quickly. And then I'll get to, here's a 2-wick and a 3-wick. These are 2 common time frames. You can see today, in the pre-market, there was some action. Again, we had one nice trade here right before the open. Another nice trade here that actually did get the profit up here. You had to take profit at this double top. You can see these trades here. Using a longer time frame essentially for direction. Not a lot of movement here on the ES today since the open. I mean, you can pretty much see, but there is a trade here, and again, this is where I would have gotten in, just to show you as an example. Right here, you can, I don't want to cover up that arrow there. Let me just move the scale of this down a little bit. If I was trading this instrument right here, basically a tick or 2 above here, this is a 2-wick Renko, so that gives you a 5-tick stop, 10-tick target to a true 2-to-1. So essentially that would be, 4-tick stop. You'd need to get an 8-tick target. You need 4 bricks. Don't quite get it, but notice here at this double bottom, and based on this price action, I would definitely be taking profit here. So you get 6 ticks out of it, a 1.5. A lot of people will consider that a great trade on the ES, especially in today's price action. So, and then really it has been choppy today. You go to a longer time frame, really the setups here are, not a lot of movement. Yesterday there was a lot more movement. The ES, to be quite frank with you, is not one of the markets that we encourage trading. There are so many valuable markets out there nowadays that, that have a lot more volatility than ES, a lot more profit to offer, and also because of today's feeds and, the good Zenfire and CQG type of data feeds available, execution's lightning fast. Internet speeds are good nowadays, so the ES is no longer required to trade. If you're trading size, meaning hundreds and hundreds of lots, this may be an instrument that you have to go to, but really that's even not necessary at that point. There's just so much out there, and I could spend all day going through this. You can use minute bars too, sure, time bars, but let me just get to the people that have been here and also want to talk about any system, that is worth its weight in gold. We'll show you entries, we'll show you stops, and we'll give you an idea of where you should take profit. So anything that's worth its weight, very visually simplistic and things of that nature. Okay. Also, let me just bring these over real quick. I just want to show you swing trading in here. A lot of people are getting interested in this. If you're a day trader and a swing trader, these tools will allow you to do the same thing in one group set. So here I just happen to be pulling up the Forex market. I know a lot of people are interested in Forex. And you can see here, these are daily range bars. And again, you can see the signals, huge profits, stop, 2 to 1. This is all recent. This is all as of current. Okay, we actually just got a buy signal in here on the dollar Swiss franc. You can really see also a buy signal here on the dollar Japanese after a huge run, though. I mean, this thing just ran up and ran up and ran up, and I don't know what's going to happen with it now. A lot of government intervention things happening here. Did get stopped out of the Aussie dollar and the euro right here, still in a short trailer. So actually had a nice another little double top reject entry could have gotten back into. Don't know how far it's going to go. You got near left side support here coming up right down here, so at about 128 based on chart, chart reading. So this is an area I used to do a lot of swing trading with Forex. Got burned in the PFG bankruptcy pretty bad. So I will get back into this, but right now still trying to swallow all that happened there. So I do not recommend people keep a lot of money in a brokerage account. We do recommend trading small risk profiles, but just keep the money somewhere else. Keep enough in your brokerage account to cover margin and 1 or 2 losing days if you have them. And you will have losing days, unless you're a good enough trader that you don't feel that you will. And, at that point in time, you can do as you choose. So I did want to show this. Let me bring up here what a lot of the people are waiting for. This is our pricing, okay, for new people and for existing people. You can see here, we lease. Indicators has traditionally been the way it's been done. And basically, for the whole Coop Bank Gang Capital, the indicators, access to the member site, weekly trainings, it's $99 a month. There is a $250 setup fee, okay, for the first month. So it's basically $349 for the first month. And then after that, it's $99 a month. We are going to start selling, as of this webinar, an introduction lifetime licenses for NT7. And this is the price. We're not going to jack it up to $3,000 and cut it in half and give you all that sales jargon that you hear out there. I really don't believe that that's doing this industry any justice, suckering people in to buy something. This setup fee is a valid fee to cover administrative costs, and it also is encouragement to get you to put the time and effort in to working with the tools, working with the training material, really putting the effort in. A lot of people request trials. They come in for a week. It takes a lot to set them up, to get them activated. They don't really do their due diligence. They play around with them. They back test them. They either find out it's not the Holy Grail, which we don't have. Anybody finds it, please let me know. And they do get a bunch of educational, they do get a good education out of it, looking at the educational material, and they just decide to leave, move on, and try to find something better, try to find the Holy Grail. So out of beta for a while now. This is what it is for leasing, and this is the cost of a lifetime license. For this webinar, okay, we're doing something very special, and it's one time only, and it's for existing members. I'll leave this up for all of you to kind of absorb. We still have everybody in here that this would pertain to. We're going to be offering a lifetime license at $12.97. Okay, it's basically a $300 discount off the standard price. And what's unique about this, and it's something I really wanted to bring in because over my years where I was not a successful trader, I'm trading 10 years, 5 non-profitably, 2 break even, 3 profitably, and nothing like this was ever offered to me. I don't know if anybody else offers it, but basically you're going to get a $99 credit for every month that you've been a paid member up to 6 months, okay? I believe our longest subscriber is 6 months, because that's basically when trend following trades started. So you're going to get that credit back applied towards this price. That'll get you a lifetime NT license, NT7, okay? And that'll open it up. You'll be able to save quite a bit of money, no longer have to worry about the monthly lease fees. Right now, it's a trade room. It's going to switch over to training. It may not stay that way. Things change with me. You may see me back in there. We may find a trader, anybody out there that feels that they can moderate a trade room. We'd be interested in hearing from you. It is something that people like to see, and it is very difficult to do, trust me. I like getting to doing it. It was very hard for me to adjust. I got schooled very quickly into patience and the pressure there is in a trade room to trade. So, you know, this is something that I think is very unique out there in the market. LT, the monthly cost is $99. You know, there is a $250 setup fee, so it doesn't include that. Your first month is $349 if you lease. You're going to get $99 credit for that. But every month you lease after that, you're going to get $99. You know, cost you $99. You'll get credit for that. One time only, we're going to give up to 6 months. And I'm going to tell you this is a one-time only for credit. You know, down the road, if you are a subscriber, we will give you up to 3 months. And then we're not going to go anything beyond that. You come on board, you stay for 3 months. If you want to continue to lease month to month to month, you can. And you want to decide to buy a lifetime license, you can. But down the road, outside this webinar, and this special is going to last for a week, okay? You will be emailed, you know, for 1 week. So if you do want to take advantage of this, there is no link in the website to purchase a lifetime license at this point in time. Please send us an email to info@trendfollowingtrades. And if you're a new user, you will save the setup fee for a first time. If you want to buy the license right out of the gate, it will be $12.97, this webinar special. And that's what it will cost you, period. If you're an existing subscriber, okay, please send us an email saying want to upgrade to a lifetime license. Or if you're somebody brand new, want to purchase a lifetime license. If you want to lease, you can go on the website and click on the PayPal buttons. That'll get you all set up. But if you want to upgrade, I have to send you separate links and instructions of how to cancel your subscription. Don't do anything now. We're going to give you full credit back for everything, you know, the current members that you pay. Yes, sorry, the $99 per month does work off this $12.97 for this webinar special only. Okay. Jacob is saying, if you leave for a few months and come back, can we resume at the $99 a month? If you want to go on hold and come back, sure. But again, outside this webinar, you're not going to get the 6 months of credit, and you're not going to get any more than 3 months into a lifetime license. You know, the holds are if you go on a month or two, you know, go on a month's vacation, it's not an indefinite hold. So, you know, if you want to go away for a month or two, and, you know, we fully understand that. We just don't want to keep, you know, somebody say, I'm on hold, and come back a year later and say, yeah, Bill, somebody just mentioned that we got the FOMC minutes coming up. So anybody want to trade after that, there won't be any recurrent fees. We can only guarantee that this is going to be for NT7, okay? The migration over to NT8 hasn't even begun. We have no idea. They haven't released any notes as to exactly what's going to change. While NT8 is still, you know, just coming out of, or still in beta, and, you know, it really is something that is down the road. This is good for 2 computers, so you can send us 2 machine IDs, and we'll allow you, you know, desktop, laptop, things of that nature. So, again, don't do anything with canceling and all that. If you're a current member that wants to upgrade, shoot us an email at info@trendfollowingtrades, and we'll send you out an email with instructions of exactly how to do it. It's kind of a logistical nightmare, but I feel strongly in giving this credit. I don't see why somebody should pay and have to upgrade. And also, if you really like what you see and the tools are working well for you, I don't see continuing to pay a lease fee on something that you can own. So, Lou, you're asking about Market Scanner. That's what we're working on next. You know what I mean? I was doing a lot of stuff based on looking at automation, but that really I'm going to leave up to the programmers and Chris to develop. I will be spending time on the market scanner so that we can look for alignment. We can look for market setting up in the value area, so you don't have to have a whole bunch of charts up yet. It's not done yet. It's something I just started. Do here is I just want to connect. Just want to see. I believe the notes are a 2 or 215. Not quite sure. Anybody that's trading, again, I do thank you. I did try to get this in there before the release because I know it's kind of dead quiet before that release, so this was intentional. So anybody has any questions, go to the contact page, info trend following trades. Anybody wants to hang around? Yeah, the lifetime license is for NT7 only. We can't make any commitments about NT8 because we have no idea what's involved in NT8. They have not released any notes to the third-party vendors, and that's just something we can't talk about because it's not here. A lot of people talk about something that's not out already. So the lifetime license is for NT7, okay? And that's really what I can say about that. What I can tell you this though is once NT8 does get into becoming the norm a year or two from now, and it's something, if we're going to be using these tools and trading in it and having to reprogram it for that, we're not going to be stupid about it, okay? But we can only guarantee that the lifetime license is for NT7, okay? And that's what a lot of this paperwork, with lifetime licenses, you have to be careful. Everyone tells you get them for life, but realistically, lifetime licenses are designed for the platform that the programs are written for, and anybody who tells you otherwise, I don't think is really being quite honest with you. So we really don't know. NT8 may work the way it is, but there may be some small changes and some big changes nobody knows at this point in time. We just don't have any details yet. We want it to work for NT8, and like I said, if it does, we're going to switch over. Oh, you want to see a black background? That's one thing I don't ever change on my charts, but color for background, let's go to black. That's a little, you can change the color of the bars if you wish, and the color of this, but there is a black background if you want to see it. You can, like I said, you can play around. These indigo candlesticks on black, and these are fully customizable, these colors, so you can have it set to whatever you want. Yeah, so that, again, you would want to change these candlesticks. You can make them green and red and, whatever you choose to make them. But you can see these signals firing. I am getting alerts in my ear. Now let's pull up gold. Pull up some gold here. We'll pull up what we're looking at. Okay, and there's your, all right, gold had the big swing. That's all the bells I heard going off in my ear was gold. You can see this nice, but you gotta look, here's the release. Okay, here's actually the release right here. 2 o'clock, move down, move up. This is 13 seconds from here to here, and from here to here is 2 minutes. So, you can probably say these are trades that you could have gotten into. Any of this, no. But, this being again, an area here, double top, wedge pattern. We ignore divergence in that case. And right here, again, this is something you have to be tuned into. Gold's a fast-moving market. There's no doubt about that. It's kind of a market that pauses and then runs like crazy. Get in here, triple break, manage, 2, 3 to 1 up here, and you'd be trailed out up here. So had you gotten in there, same entry right here, okay, it would have been trailed out for some nice profit. Okay, again, on the main time frame, no shorts inside here, still inside the chop zone. Okay, just transitioning through. So, we are right after the Fed announcement. Did get one nice push up. Had you gotten in here, you can see, right in here, got close to your area. Also, one of the things that I like to promote is when you get to 75% of your target, move your stop to break even or cut your risk down. So you could either gotten a little bit of profit, got out of break even, or had a small stop if you would have taken these shorts on a smaller time frame only. On a larger time frame, there was never even a trade. Damon, right now, Damon's asking me if you can add on the $70 per month trade room. You're asking about the price, if the lifetime license is going to include the trade room. No. Okay. The members that were in the beginning that were told that the trade room was going to be part of their subscription, I'm going to say yes to that. So, in whatever capacity it comes back in, you'll be able to get back in it. But the trade room is a very time-consuming and, how can I say, to do it the right way. To sit here and wait for only one setup all day, really a trade room is to me a waste of time. But to really work a trade room and work it hard, it takes time, commitment, and all that costs money. So we did make a commitment to the subscribers that came on board when I came on board that we would, make the trade room available. And as long as there is a trade room, I don't see why not. Somebody new coming on board, it was always an extra charge, and it was on a monthly basis. So that charge will continue to be there. Yes, Lou, there will be an email going out to everybody this evening. It'll be an email with a link to this recording, and it will also be an email summarizing basically this, showing, and I will put a blurb in there about the trade room also. So anybody that's a subscriber, don't, freak out and do anything and start canceling stuff. We'll give you instructions, and again, anything that is paid to PayPal will be credited. So we're going to look back at when everybody's time's due and things of that nature, and on an individual one-by-one basis. But you have to send me an email saying want to upgrade the lifetime license. Otherwise, you'll just continue to be a monthly subscriber. So there's the email. There's a phone number on the contact area of the website. Here's the purchase page. This is going to be eventually filled up with a lifetime license. Okay. Here's the contact page. So you can either call here or shoot an email, and we'll be able to work with you that way. Yeah, thank you very much, Lou. That's kind of where that's at. If anybody wants to hang around and look at some charts, we did just have a Fed release. Gold went kind of nuts. I believe the indexes, at least when I looked at them earlier, went nowhere. But you did notice here, we did get a buy to sell just outside the chop zone, pull back in the value area, get short here, short. Nice trade. I would not take the second one trailing out. Okay, I wouldn't take this buy. Swing is down inside the chop zone. Okay, this is a small time frame only. So if you want to watch this live, you can sit here and watch the system perform live. It is nice to find a market that moves after a news release like that. But I think this gives a pretty good depiction of what we're showing. The visual simplicity of this value area. I can't draw it in here because this chart's moving, but this area in between the trigger line and the stop area. Using the tools, not trading in divergence. Again, there's another entry here, though, if you want to do what I consider adds. You do have a double top here. We do have another wedge pattern right here. So if you get in the trade here, fine. If you miss that, you get into here. It is set up for a triple break, and it does break. So two nice trades actually three nice trades. If you're into that kind of trading, what I'll call target trading, and you want some real good setups, three nice quick trades. After the news. We're on a stock. I did want to show you this too, for those that are still here. You can use these on stocks, ETFs, and options on them. The last webinar I did, I was talking about, you'll see these arrows here, but these are earnings releases and strangles and straddles that I was talking about, playing earnings releases. That has nothing to do with TFT, but these tools do work on daily bars. So if you find stocks that have nice ebb and flow with them, these are actual volatile stocks at earnings releases. I don't know that. So anyway, it does work. Intraday, swing trading, Forex trading, things of that nature. And also with swing trading, especially Forex, I do want to bring back in one of these charts. I'll bring back in the Euro-US dollar, probably the most common of the charts that are traded as a swing chart. This goes back 600 days, but you can see here, these green arrows, these are system trades. Again, using the trailing method, 2-to-1, trail out, 2-to-1, and trail out, 2-to-1, nice trailer, 2-to-1, nothing on the trailer, 2-to-1, a little bit on the trailer, 2-to-1, a little bit on the trailer. When I say a little bit, a few hundred ticks or pips. Here, a nice 2-to-1 on the first two. You can do 3 mini lots with this. Here's a nice sell, easy 2-to-1, still trailing out, looking for the euro to come down. There is major support down here. We're kind of sitting right on it, another level right below it down here. And then obviously, you know, if I draw this line across the chart here, just want to draw this line. Anybody who's trading currencies, there's a line that kind of goes right around here in this area as a major area of support, and then you have some minor areas right up in here for swing trading. So would be currently short trailing. And again, this is a 5 or 10 minute look at your charts, 5 or 10 minutes a day. You can use the E-mini, the micro minis on futures, or you can use the Forex spot market. I like the micro minis on futures. The only thing I don't like is rollover. You're quite welcome there. And again, here we still have gold. I'll just draw this in here. Every trading methodology or system will have losers. So if you want to play the pure system, let's just call that a loser. Get in here, hold above here, 1, 2. I did go 75%, 4 bricks is the target, so either break even or loser, but let's just call it a loser. And then here you have a winner. So 4 winners, 1 loser. This is a trade inside. They're just transitioning through. Some people will take these trades. It actually does have a start point. If you want to look at this, we do have a small divergence down here. Breakthrough here, pulls back into the value area. There's a nice little double bottom here. Can take the trade if you want to put on the risk. And it's still trailing out. That divergence exists essentially as a double bottom. Everybody have an excellent day. And thank you again for attending this webinar, this info webinar. And hope to hear from you. Any subscribers or anybody new wants to come in, please don't hesitate to call or shoot us an email.